Happy Friday, Maverick Traders. This is Rob Reinhold, and here we are again at the trading room. All right, we are going into October monthly options expiration this week, so let's get ready. All right, let's start off with a little news from last week. The big news is we hit new all-time highs. Now look, that was the same news as the week before. We just had another positive week. So any positive week from here on out is going to be a new all-time high. And frankly, we've actually had, I believe this was the 5th straight positive week that we've had. So the market is definitely bullish here. Last week, we got the FOMC minutes, and inside those minutes, it showed what they called a spirited debate, meaning that half of the group wanted a 50 basis point cut and the other half only wanted a 25 basis point. Now, spirited debate means that it got fairly heated. Now, this is important because when we got the cut, we didn't really know what happened. So they came out, they cut 50 basis points, and we think, oh, the Fed is more dovish than we thought. Now we see the internals of them arguing, and we realize it was a really close call between 50 and 25 basis points, which tells us that the Fed is not as dovish as we previously thought. Because of this, we saw bond yields go up this week. We saw the US dollar strengthen, and we're going to take a look at some of the inflation reports we got that also caused those things to go higher. But on Friday, we got the official open of third quarter earnings season, and it's always the big banks first. So we had JP Morgan, Wells Fargo, and BlackRock all came out with great numbers, and they all had good gains. So they're starting off on a very bullish note. Last week, we had the CPI report, and the CPI report came out hot. Expectations were for 0.1 on the headline and 0.2 in the core, and it was 0.2 on the headline, 0.3 in the core. Last week I said that if this number comes out hot, I don't think the market's really going to care. And for the most part, that was correct. Thursday was a slightly down day, but it was only down like 0.2%. And then the next day on Friday, we got the PPI report that came out lower than expectations. And so it really helped soothe the market on these hotter than expected inflation numbers. However, I do want to point out one report here is that the employment claims were dramatically higher than they were supposed to be. Now, this is how many people file for unemployment every week. This is not a great situation, but I don't want anyone to get all crazy about this because this is literally one number, one data point. This is a weekly number that is revised all the time. But when you have higher employment claims or unemployment claims and higher inflation, that has a word, and that's called stagflation. Weak growth, high inflation. It's about the worst scenario out there. Like I said, do not get ahead of the inflation on this one. Do not get all crazy. Say, see, I knew this economy wasn't that good. These numbers, just 1 week of unemployment claims, you cannot get bearish here because the market is clearly shouting at you, yelling at you, hitting you over the head that it is bullish. And as traders, we go with the market. We trade the market in front of us, not our opinions, not what we think it should be. We trade the technicals. Dow was up 1%, S&P up 1%, Q up 1%, and the Russell that's been underperforming, it caught up on Friday. So pretty much a 1% move across the board. Oil, very volatile this week, but in the end ended up. And gold hanging out right at all-time highs, basically a flat week. If we take a look at these charts, there's nothing but bullishness here in this chart. A run up to new highs, we pull back. And we talked about this was a very orderly pullback. We got the doji on last Thursday, and then we got the confirmation candle on Friday. Now look, Monday's candle was garbage. That's a nasty candle. I know we love V bottoms or V pullbacks. These are very easy because we don't even have to think. We don't even have to stress. I talked to a few traders on this day that got bullish the day before, and they were really like, oh my gosh, what is happening? I just got bullish off this candle and we got this. This is where it's just one candle, just one day. And you can see by the end of the week, We close at new all-time highs, and we close at the high candle on Friday. This is as bullish as it gets. So bull markets in the S&P, bullish markets in the Qs. As you can see, these candles are nice gap downs and run up on Thursday and Friday, right at a resistance level, gathering some momentum. There's no reason why we don't see breakouts to the upside. Looking at the heat map, you can see a lot of green out there, a sea of green, and it's actually fairly healthy because look at the things that didn't participate. It's the Mag 7. Microsoft, Nvidia, Apple, Google, Meta, Amazon, all pretty much flat. Tesla had a nasty week, but this is where most stocks participated in this rally, and that's a very good sign that this market's likely going higher. So let's talk about this week's outlook. The market's bullish. I've been saying this for weeks and weeks and weeks, and I've been really hammering on my perma bears and just saying, look, you cannot stay bearish. You cannot stay bearish. And I think pretty much I've got everyone on board at Maverick that was bearish. They say reluctantly, okay, fine, I'll go bullish now, but I'm going to go bearish after the election. Fine, whatever. Just trade the market in front of you right now. We'll work on that later. This week, we do have the bond markets close on Monday for the Columbus Day holiday. Usually that just means that we see a little bit less volume, a little bit less volatility, nothing to be concerned about whatsoever. I've had this next one up, velocity slowing into the election. I've been calling for a slow grind higher into the election of just like what we saw this week, 1% a week. I think this next week is going to be a lot of what we had this week. Probably one red candle, maybe two red candles in there, but by the end of the week, we're up 1%. However, we do have some news coming about volatility. We always get higher volatility when earnings start. So we have some earnings, but as you can see here, we don't have the big names that usually bring all of the crazy activity, the Microsofts, the Teslas, the Apples. We do have Netflix on Thursday, but these are pretty much normal companies that aren't going to really cause any crazy things. Probably next week is the week that higher volatility is more likely due to earnings. There's only one economic report on the calendar this week that I think is even important to talk about, and that's retail sales. You need to understand that throughout your career, there's ebbs and flows of how important things are. For pretty much all of the 2010s, we didn't mention inflation. We didn't mention the CPI report. We talked about other things. And then all of a sudden, the CPI report became everything, and all the other reports became ignored. We are moving out of this high inflation environment, and we're moving now into more normal inflation environment, and so these numbers are going to matter less. And then some numbers that we didn't care about 2 years ago are going to start to matter more, and I believe this retail sales report is one of those. Right now, the market is more concerned with economic growth than it is with inflation. So any of the numbers that show economic growth are going to become more important than inflation numbers. And this retail sales is one of them. So looking for a decent report, 0.3% growth month over month, core up 1%. Anything hotter than that, the market is going to like that quite a bit. If these numbers are negative, the market might start worrying about low economic growth just from these numbers. Regardless, it's a +3 market. And I've been saying this we've been at +3 now for 3 or 4 weeks. I don't care if you like it. I don't care if you agree with it. I don't care if you think this country or this world's going down the toilet. I don't care what your opinion is. The +3 is very, very clear. So let's go in and jump into the sectors. We'll score those and make sure that we are investing in the right sectors as well. Let's take a look at the numbers last week. Last week we had 5 sectors that were rated as +3. What were they? They were industrials, financials, consumer, materials, and utilities. So those were our 5 +3 sectors, and you can see utilities took a big drop. But industrials and financials did fantastic. Materials did okay. Consumer also underperformed. This is the second week in a row that the consumer sector has been down, but we're pretty much in the right places. We talk about being in the right places. We had a negative on real estate and you can see that was down. We also had a negative on healthcare that actually bounced up a little bit. But sector returns are doing pretty much what we expected them to do. So let's go ahead and just update all the sector scores and see the changes, and that's going to help us make allocations to our next trades. Utilities were a +3, and you can see that we've now gone below the 20-period moving average. We're hanging out in between. They're both still sloping higher, but this is a +1 and probably likely to go to a 0 next week as these moving averages start to flatten out. But right now, +1 on utilities. We are at a +3 on communication services, and we stay a +3 on communication services. High basing. Beautiful, beautiful candle patterns here. Just a high base. Expect this one to break out to the upside if the market goes higher. In real estate, we've been talking about how over the past couple of weeks, we downgraded it from a +3 to a +2 to a +1 to a 0, and then to a negative here. So we take a look at this. This is a -1 on real estate. Not super bearish, but definitely out of favor. Healthcare was also one of those that were out of favor as of last week. You can see it had a nice bounce, but it just bounced right back to moving averages here. So we are going to move from a -2 to a 0, but we can still be leaning to the bearish side on healthcare. Coming over here to industrials. Industrials was my favorite sector last week, and it was a great performer. Look at that candle on Friday. So I love this. I call this a rising base where, bases usually go sideways, but every so often you get rising bases, just telling you that even when it's sideways, it's still moving higher. And rising bases usually have this big explosive candle because the pressure is just building up and they can't contain it, and it bursts out. +3 all day on industrials. This is probably the best looking chart in the sectors that we're going to look at today. This is the financials, and we've been in a 2-month base. A 2-month base hanging out above moving averages, so it's been staying strong but just hasn't been running. It broke out on those bank earnings. I don't see any reason why this doesn't have another 3 weeks, 4-week run in it because of how long that base was. So this is going to go to a +3 from a +2. And then this was the sector that actually was at a +3, and we pulled back, which was fine. And you can see there was not great bouncing action off of that. We can't go super negative on this, but we definitely have to take this down from a +3 to a +2. This is the consumer discretionary sector. And then tech was at a +2. So he said, hey, consumer, you move aside. I'm going to be moving up to +3. The moving averages have now straightened and gone higher, which gives us that last score to a +3. Tech looks great. Tech looks absolutely great here. Materials was at a +3. It remains at a +3. But I do have to say, if you took a look at this on Tuesday, you would be like, ooh, this looks like it might be losing its mojo. Well, guess what? 3 nice green up candles off of that pretty steady buying shows you that it still wants to stay strong. And energy, we are at a +2. It's going to stay at a +2. We still have this 50-day moving average going sideways. Once that turns up, we can raise up our rating. But great candles here. Again, big hit on Monday. And then it just recovered everything on Wednesday, Thursday, Friday. So the buyers are still there in energy. So last week we had 5 +3s and 2 +2s. This week, things just changed a little bit. So financials and tech strengthened a little bit. Consumer and utilities weakened a little bit. And then on our weak sectors, healthcare had a bounce, bringing it to 0, and real estate slid a little bit more. Here's where we are. There are 5 sectors that look really good here. Financials is my favorite. Comm services, materials, industrials, tech. These are the sectors we want to be looking for bulls, and real estate and healthcare remain the weakest sectors out there. So let's talk about our trade allocation and our trade slots. We had 5 trades roll off last week. We had a small loss in PG&E in utilities, but then we had 4 max gainers on the week. So that's a nice 80% win rate on the week of positions that had expired. That's going to leave us with a lot of new trades that we can make. So if we go check on the chart, we're still at a +3. It's a clear +3, no doubt about it. So at +3, we have predetermined that these are the trades we can take. We can take up to 2 +3s. +3s are the most aggressive trade you can possibly make. We can make up to 4 +2 trades. These are pretty aggressive, not crazy like +3s, but pretty aggressive. We can take up to 3 +1s. We can take up to 3 zeros. And the most bearish we can get is we can take 1 -2. That is it. So if we take a look at where we are now, what the allocation we already have 2 -1s. We could take a -2 if we wanted. Well, here's where we get to make some discretionary decisions. I don't want to. I don't want to take any -2s because I am very bullish at the moment. So I'm going to use all this area up here to fill in some slots. I'm going to add in another +3, and I'm going to do that in the material sector. I'm going to add 2 +2s. I'm going to do that in industrials and financials. I'm going to add a +1 in tech, and I'm going to add a 0 in the utility sector. So let's go take a look at some possibilities. And of course, your trading slots are going to be different, so just find the right trades for your slots. Looking in the utilities. Right now we're at a +1. I think we're likely going to go to a 0, so I'm looking for a sideways trade in the utility sector. So this is AEP, and you can see it had a nice run. And remember, the rest of the utility sector really broke about here. So utilities was in an uptrend until about the 1st of October. This thing topped out well before it. So it's been weaker than the sector. It's definitely been weaker than the sector. So here we are, we're looking at this. We have this nice band of support right in here. We got some bouncing price action, but we also have this overhead of moving averages and resistance here. So I'm looking at this saying, you know what, 100. 100 looks like, I don't think it's going to go back above 100. And I also am not super bearish here on this. How about this range? How about this range right in here between 95 and 100? And that's where I want to be. I want to be right there. Now look, these only have monthly options, so we're going to have to do a 1-week trade, but there is some good meat on the bone here on this one. So looking to do the 95, 97.50, 100, and the current stock price is at 98.32. So this is going to be slightly bearish. I've got this at a -0.5. So again, it's a slightly bearish butterfly. We actually want this thing to move down to that 97.50 area. There's only 1 or 2 stocks in the entire sector that have weeklies. So you either had to do a monthly option that expires this week, or you had got to go all the way out to November, which is a little bit too much time for me. Moving on to industrials, great looking sector. We had a great max gain on Raytheon RTX that rolled off, so let's replace it with another good looking chart here. This is GE Aerospace, just a beautiful high base. Had a big run, high based for, that's about a month of time. And look at this, we're poking our head up above that. Everything looks good. The sector's strong, the stock is strong, the market is strong. So this is where you get to choose how aggressive you want to be, and I've already predetermined that my industrial slot was going to be a +2. So that means I'm looking for a spread with about a 0.3 delta. So I want to be 2-to-1 risk reward. So that's going to be this one, the 190, 195 bull call spread, 2 weeks out, October 25th. I also want to get more bullish in the financial sector. We had American Express roll off at a max gain. So let's replace it with another strong looking stock. And here is PayPal. Just a beautiful looking chart here. Had a nice run up. And this has been messy. This has been messy. And look, a lot of times when you get really close to a chart and you look at this and you say, oh, this is messy. But when you go back and you say, oh, this is just a base. This is just a base. It looks a little wonky and maybe it's poked its head up on the top and the bottom a couple times. But in the end, this has been sideways price action now for about 3 weeks. This one has not broken out yet, so we want to make sure that we understand that. So we want to give this thing some time. I've already predetermined it as a +2. I looked at this and I said, okay, do I want to do 2 weeks or do I want to go out to November 1st to do 3 weeks? I decided I'm going to do the 2 weeks because I want to get this all done before the election. I don't want to be having a ton of trades over the election because I expect there to be some possible trend changes, some possible things going on. So I felt very comfortable with before the election here. And this thing just has to break out to go to 83. 83 is the upper end of that spread. So the 79.83, you can see not asking this to go all that far. It does not have to go all that far for us to have a really nice return on this one. Tech looks great. It has underperformed for a while. Remember, it got absolutely hammered in July, and it was slow to bounce back in August when everything else was doing really nicely. It's finally starting to look good again. Here is Shopify. Had a big run here off of the September bottom. Had a very, very mild pullback. We had a breakout. And you can see, I'm looking at these saying, hey, these are most likely just two bases here. That's really all that's happened. But look at these moving averages. They're all just telling me prices are going higher. And every time it gaps down, people come in and buy it. Look at these. The last 2 days here were all down gaps. And by the end of the day, people hit bottoms. So this thing looks like it wants to go higher. So the question is, how do you want to play it? I'd already predetermined that this one is going to be a +2. So I'm looking at the 83.86. Sorry, I actually was going to do a +1 on this one. So this is going to be my trade on the +1. It's an 82.84 for next week. 82.84. As you can see, this is about the wimpiest trade you could possibly make. As long as it's above 84 on Friday, this thing is going to be a max gainer for us. So Shopify in tech. And then materials is where I got my +3. So I want to swing for the fence here. So I want to find a stock that has the most upside. All those other ones, I did not pick them because they had the best upside potential. I picked them because they fit my criteria, my +2. I don't need something that's going to go from 50 to 100 if I'm in a 50-55 bull call spread. I don't get paid extra if it goes to 100. So I want to reserve these +3s for just things that I think are going to be taking off. And this is Alcoa. Now, Alcoa has some stuff going on. Some buyouts from Nippon Steel is going through. But the stock is doing great. It had a great recovery out this bottom. The sector has moved nicely, and it broke out on Friday. So I'm looking for this one to going out to this November 1st, 42.45. Earnings are October 16th. Now, whenever I talk about a stock that has earnings, I always have people say, Rob, why are you trading this during earnings? Hey, we should be a little cautious about that. Totally agree, except remember, my trade is a +3. I want something that either runs 20% or falls 20%. Now, look, if I'm long, I would prefer it to run 20%, but we don't get to pick that. I just want to find something that's going to have a large move. And if I can hold a position over an earnings report, that is only going to help the possibility that it's a large move. It could be a large move against me. I get it. I understand it. But remember, this is a spread. This is a spread. I have a totally capped risk on this. Even if this thing goes to 0, I can only lose what I paid for the spread. So I'm looking at that 42.45 spread. So it's going to be way off. I should have changed this chart so we could look at it, but you could see it has to have a substantial run. This stock has to go up 10% to reach our max gain level. Will that happen? Who knows? Who knows? That's the fun thing about trading. If you have some stocks you want to share with the rest of the group, please. We love to see the chatter going on in our forum. Go to the website, log in. Let's get the discussion going. Let's help the whole group make some good returns here in the fourth quarter. Let's wrap this up. Markets are bullish. And I've been putting this here, this number 2. If you don't feel it, plug your nose and buy. I feel like I am no longer getting the emails that I was getting previously where people are saying, Rob, I know the market's going higher, but I just can't get myself to be bullish. I just can't get on board, or I think you're wrong. I'm no longer getting those comments. So I've been working really hard. Whenever I see that from our traders, I think, okay, if I'm talking to 3 or 4 traders that are feeling that, I know I've probably got 30 or 40 other traders that just aren't talking with me about it, that feel it. So that's why I come on here and I really hammer, these discussions I'm having with one person, because I know there's a lot of other people. And I really feel like I've got all my perma bears. They're at least on board with this bull market for the moment. Look, here's the thing. You don't have to marry a bull market. And it would be stupid to marry a bull market because they all end. The point is, when it's rising, just go with it. You can be pessimistic. You can hate it. Just be on the ride with it. But what will happen is, after you've done that a couple times, you'll understand that, I can feel differently inside and still ride a bull market run, and then be ready for when it ends. Then I can go ahead and go short like my personality wants to do. All of a sudden, you're in control now. Your emotions aren't running you. You are handling and running your emotions. Sector analysis is the key. The traders who have, even the traders who were bearish, they've been in the right sectors and they've done okay. Sector analysis is so key right here. There's 5 sectors that are doing great. There's 2 that are sideways, and there's 2 or 3 that are not performing. If you're in the right sectors, you could be bearish, and if you were just in a lot of bears in those sectors and not had a lot of bulls, you still are doing okay. But just use your sector analysis. Make sure you're in the right places. Everyone have a great weekend. Take care, and let's make sure that this October options expiration cycle is a good one. Goodbye.